you talk about inflation, where you really have to go to is the definition of inflation, because what we're seeing is like two different viewpoints bashing heads. We don't even have the right words to explain our viewpoints, because the Keynesians, the modern monetary theorists are saying inflation is one thing, and then free market advocates are saying inflation is another thing. So obviously from Powell's answers the other day, we can tell that they don't think that running a budget deficit causes inflation. They don't think that increasing the currency supply causes inflation. So they've just changed the definition of inflation to a general rise in prices. But that is not the correct definition of inflation. The correct definition of inflation is a general rise in prices because of an increase in the currency supply units that steal their purchasing power from all other currency units. So they're just lopping off the because of what's happening and using a very generalized definition. And the best way to imagine this is to just quickly kind of go through the economics of how this would work. So today we see that the economy is struggling in real terms, right? So GDP without the right CPI GDP deflator is still positive. But when you go back and you look at real CPI and plug that in and have the proper deflator, GDP is stagnant or going down. What do I mean by that? It means the economy is not growing super fast. The economy is not the reason why prices were going up. The cure to higher prices is higher prices. So if the economy was the reason that prices were going up, well, then that would be a good thing, because as prices go up, producers make more money. And as producers make more money, they increase their supply. And when they increase their supply, they lower their marginal cost of production. If you can build 1 million water bottles, it's going to be cheaper per water bottle than if you produce 100,000 water bottles. So this process, which is a natural free market process, it's the price discovery mechanism that signals to entrepreneurs who build businesses and create jobs where there's opportunity to make a profit. That's what draws their attention. So profit is a good thing. And those higher prices drive profit, which drives supply, which lowers the marginal cost of production, which eventually allows producers to lower the front end price, because they're more concerned about moving more units than they are about at a higher price. So if we were seeing that kind of inflation, then what we would really see is GDP like we've never seen before. GDP would be off the charts because the economy would be so hot. That'd be the reason that all the prices are getting pushed up. But instead, the real reason that the prices are going up is not because of demand from the economy, but from a lack of purchasing power from the dollar. The dollar gets continually diluted, and day after day, it can buy less and less and less. Now, temporarily, there's been an increase in purchasing power because the Federal Reserve has raised interest rates in the most aggressive clip in modern history. So because of this extreme rise in interest rates, there has been a temporary value of purchasing power driven into the dollar, especially against other fiat currencies. But when push comes to shove on a net basis, there's still a lag time to the 40% increase of dollars they printed as a result of COVID. So this disinflationary wave we've had, this little break that we've had, is solely due to the increase in interest rates, attracting people into the dollar and buying demand into the dollar.